What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is October 24th of 2017. Well, folks, as you all keep up with the channel, you know that from time to time I like to share a trading tip here on the DataDash channel, and I know many of you out there who watch this series want to start day trading. You want to be a part of that 5% that's going to make money at the end of the day, and you even want to be a part of that 5% that's going to be the absolute go-getter who puts in the extra effort and makes more money than the average investor. Well, no matter if you are going to be that at the end of the day or not, I want to give you all the information I can and help you get to that desired position, no matter what. All right, so today I'm going to be talking about my general kind of day trading strategy. This is how I would day trade cryptocurrencies if I did. Now, but to be fair with you all, I don't do it anymore. And of course, over time, you're going to have to adjust this strategy to work for you and to really, work within your risk to reward profile, etc. Okay, so this is generally how I would day trade cryptocurrencies, and you'll see that it's relatively simple. It's not rocket science, but I'll go through an example trade at the end of this video as we go through it, but there's a procedure that I take on. I don't just, hop into anything. So a lot of you ask me what indicators I use. I got a lot of requests on Reddit asking about what indicators I would use when I'm doing day trading, and I think something that I think a lot of people have a misconception on is that we would start on the 5-minute, the 10-minute, the 15-minute, 30-minute, hourly chart, 4-hour chart. No, we're starting on the daily chart. Because if we don't know the general tone of the market, we don't really know the tone that the market's going to take during the day. We want to, as always, be a step ahead of the market. We want to know generally what the tone is. So we can obviously see Bitcoin's been on a killer rally. It's been very bullish. However, we want to look in the span of the past 3 or 4 days. Okay, we want to see if things are holding well above moving averages. In this case, I already know that clearly. So if you can have multiple indicators, unlike myself, who can only have 3 on the free version of TradingView, I would definitely recommend having moving averages. But we know obviously now that Bitcoin's been on a killer rally and it's well above any of its moving averages. But the 3 indicators that I would use outside of moving averages to see where they are, if it's overextended against the moving averages or under the moving averages, is these 3 indicators that I have printed on the screen: the Bollinger Bands, the MACD, and the RSI. Now, if you keep up with the series, you're probably aware of all 3 of these indicators. However, if you don't know about these, I recommend you go check out those videos. Now, to dive into this and kind of do it in a brief explanation, there's 3 things that I look for. In this case with the Bollinger Bands, I'm going to see whether or not the volatility is low, for example, over here, where markets are starting to inch in. This is usually when you can expect a sell-off, as we saw over here and over here. When we start to see the bands, which were overextended, start to close inward. That means that the run-up is usually drying up and it's looking like we're going to see a pullback. In this case here, the bands are extremely extended, so we're kind of, in a sense, I think in my mind, going into an exit of the bull market. And we're going to start seeing the wedging of the price action in Bitcoin. Now, of course, this is putting all biases aside. I'm just saying, in a technical sense, this is what I'm getting. I'm seeing that we're starting to close in on a huge gap in the Bollinger Bands, which means that most likely we're going to start seeing a correction soon. Down here in the MACD, I'm getting the same exact signal. The MACD has MACD crosses. When, in this case, the blue line crosses over the orange line, this is indicating a positive MACD cross. The opposite goes for when the blue line is well overextended and is starting to cross through the orange line. Again, no guarantee that we're in a bear market, but definitely settling in a bearish tone. And same here with the RSI. We see the RSI overextended on the top end rather on the low, indicating that something is most likely overbought, in this case Bitcoin. So we have 3 main indicators without any personal bias, pretty much giving us a clear signal that, look, things are going to probably take off a sell-off tone in the next day or 2. So we should probably plan our trades more to the bearish side, or at least more likely to make a bearish trade. So let's go ahead here to the hourly here on Bitcoin. This is the same exact chart we're looking at, but just simply looking at an hourly time zone. So all of these candles represent an hour rather than the daily chart that we were looking at. Now, We can take a look here at these two moving averages because they're the only ones we're going to be using. I know, right? You're probably looking for some crazy indicator that I would use during day trading. Not really. A lot of the day trading indicators that are useful inside of traditional markets, the VWAP being one. That's one that I haven't talked about in the channel. I really felt like mentioning it, but to be fair with you all, I don't use that or any other crazy indicators to day trade. I use two major things. I use moving averages and I use price levels for resistance and support. Really, you don't need any complex Fibonacci combination, Elliott wave theory, there's nothing like that you need. A lot of it is simple price level support, and it sees, the price will see whether or not it can sustain at certain levels. And I'll show you why it's so simple and so important. Of course, this isn't some secret, simplified trading method that's just going to guarantee you millions, but trading really isn't, I think, what people make it out to be in a lot of cases, especially in new markets like cryptocurrencies. So we have the moving averages here. I'm going to go over these real quick. As you can see, when Bitcoin is in a bull market, when it is killing it, you'll see that in a lot of cases, we can even go back to the previous bull run out of the August fork. We could see that Bitcoin relatively remained above the 50-day, and if not, it found support around the 200-day. And once, it really got into rally mode, there was rarely any occasions that it went below the 50. Now, when you start seeing dips below the 50, you look for support on the 200-hour because the 50-hour is the bullish indicator. If it's staying above the 50-hour, man, the market is killing it. In this case, Bitcoin is doing fantastic. However, when it starts to go down below the 50, you're looking for, okay, hold on, we might need a little bit of a short-term cool down. We're looking to hopefully maybe get a pullback and find support at the 200-hour. Now, if you break the 200-hour, that might show that there's a little bit of market fear. In the more cases where you see, for example, here, and then also here, you start seeing larger dips under the 200-hour. That can indicate that you are stepping up towards a reversal in the market, and you do have to, keep accordance of those larger moves when you're day trading. So, as we come over to here, same case. We rarely, after we actually started the bull market rally for the third phase of this year, we've had very few cases where we dip below the 200-hour, but we could start to see that same trend where it was a little bit, and then a larger amount, and then we're also dipping up here again. So we might see a little bit of a further pullback, and if we continue to do that, we definitely want to consider that overall longer term trend. But the main thing to keep in mind is right now, it is not very bullish. We are down below the 200-hour and the 50-hour, which are usually seen as indicators of support. Now they're acting as resistance, as we can see here with the price action when it tried to correct back up. Now, there's a few things that I want to talk about outside of this, and how we can start setting our levels to sell and buy or whatever we want to plan to do. I gotta tell you, in this case, with the three indicators that we looked at earlier, and right now being below the 200-hour and the 50-hour, this is feeling pretty bearish to me. Again, cutting out all biases that I have for Bitcoin. Love Bitcoin, not talking bad about it in the long term, but we're thinking short term. We're thinking, like micro profits in the grand scheme of things to, Bitcoin long term. So, what would my trade strategy be here? Well, I first off want to find levels of support, resistance, or just generally big, even numbers that matter. And I'm going to show you how simple this really is. And you're going to notice a trend that all the levels that I draw here on the chart. So just give me 1 second to really kind of draw these in. Okay. I should change the color here real quick. Okay. Now, ignoring the length of the lines or anything like that, do you notice what I did with all these lines here? You might not see it because this red box is getting in the way from the chart. But all of the lines are big even numbers. They're $100 intervals. Now, I didn't just draw them on there because of that. They do play a role in the price action of Bitcoin. See generally where the resistance was for here and here, and the support was for here and here. 5,600, 5,700. Where was the support hanging for quite some time once Bitcoin was pulling back here below the 50-hour? 5,800, 5,800, and when it broke through it, it slammed through, and then it came back up, Trying to find support there again, could not, broke through to new lows and found support at the next $100 level. So these $100 intervals are very important. They're big even numbers, so we have to keep them in mind. So going back here to the red color here, I'm planning most likely to do a bearish trade, but I want to come in with strategies for both ways. So in this case, I'm going to wait until the catalyst happens. I'm waiting for 5,600 to break. Now, why is that? Because much like how when we break the $100 intervals before, we break down to new lows. Okay, and it looks like, it kind of generally speaking, I'm already kind of picking up a trend in price action. This looks like it's going to break down lower. Again, you got to do your own research. You got to see whether or not you'd actually come to the same conclusion as me. But what I plan to do is make a trade a little bit below the big even. You don't want to set it for 5,600. You want to hope for maybe, I'd probably say at least $10 or $15 under. So we'll go ahead and make a trade idea that we will short the market in this case. Of course, I don't think most of you would do shorting, but we would short Bitcoin at $5,585, and we'd hope for a continuation of the breakdown. Now, after that, the reason why this would be such a good trade opportunity is, even though I'm drawing my line, only this far, what other support levels do we really have until, we stop seeing a sell-off? Where could we see Bitcoin cool down and maybe get some support? Well, maybe here, right here, we kind of saw some support over here at the $5,400 level. But after it contests that, nothing really until 5,100. That could be a great trading opportunity. And this is where we can go ahead and assume that we have a good risk to reward profile. And we could, of course, set a stop as well if it comes back up here to 5,700. And we lose a little bit of money, no big deal. But the same goes for looking to the long side. You want to look for opportunities where there's room to grow and also room for the bulls to lose to short. Now, again, I think most of you don't short out there. I'm just showing you generally how I would play the market. Now, I'm not going to go out of this without coming out with a bullish case scenario. So let's say, for example, that this curves back up and almost kind of cups back in price action. I would see that as a bullish thing. If it could have a nice smooth transition here along the support level, come back up here past this resistance, and come up to the top of these wicks. So if we have an eventual bounce and we come back up here, which would be a bullish sign, I would make a trade after we got above this level right here, the next big even of 5,800. And I would buy in for a long position and hopefully ride up to see if we can break through these small levels of resistance at the 100 levels. And again, you see those resistance levels, 5,950, 6,050, you find common trends, 6,150. I mean, it's just, again, you got to look for trends like that in price levels. I can't give you some, perfect, mantra to follow. There's no, granted system that's going to work every single time. But you'll find those common little trends where traders are, thanking off those big evens. Humans love big even numbers, and they love looking for levels of price support and resistance. So, again, it's very subjective, and it's very much based on the case scenario that you're in. However, if you can use those moving averages and you can use those price levels for support and resistance, and again, taking the first step to look at the general trend of the market, so you can get that, that edge on other traders who are always looking at the 1 minute. You're going to have a picture of the broader picture, which does play a role. You can be multiple steps ahead of the game and make much more money day trading. All right, everyone. Thank you all so much for watching the video. If you guys like this, please give it a like. Consider subscribing to the channel if you haven't already. We love having you here at the Data Dash community. And if you've got an idea for a trading tip video, feel free to hop over to our subreddit at r/datadash or reach out to me in the comments down below. I'd love to get some feedback and hear what you all would like to see on the series. But until then, everyone, I will see you all in the next video. Stay tuned.